Hey, I'm here in Canfield at the next step with purchasing a rental property. I got to get insurance on your property. So I'm sitting here with David Moliterno with Moliterno Insurance, and he's going to kind of walk us through why it's important to to have insurance on your rental property. I kind of noticed that even if you're like a wholesaler with properties, just selling a note, you actually want to insure that as well for the 30 days because you never know what could happen. So it's important to do that too, not even if you're just owning the property. So, hey, what's up, Dave?
Hey, Joel.
Just another step in the process here. When you're grabbing a rental property, you got to get it insured. So
absolutely.
What I guess kind of go over the coverage that I have with a couple of the properties that I have with you.
So, just to start out, you have what's called a rental owner policy. Each company might call it their own different thing, but it's going to be dwelling coverage, not necessarily personal property. So you're covering the building. You're not necessarily covering what's inside the building. That's a lot of time that's up to the renter or the tenant to then carry their own coverage because it's their property. As the as the landlord, you don't want to have to be responsible for all of that. But when you're looking at your rental owner policy, there's two different ways that there's two different types of perils. There's like a named peril, which it's going to go through and say these are the things, fire, storms, whatever's named in that policy. Those are going to be the things that you're insured against. And then you might have like an all peril or special peril. Those are going to be, and depending on how the company words that, but it's going to be more broad on what's covered.
It's kind of on me how much kind of want to buy with insurance, and how much the property's worth to me essentially, and how much to cover.
That's up to the policy holder. What do they want covered? Do they want just fire? Do they want more than that covered? If there's there's even separate policies for earthquakes, for floods. Flood insurance, that's actually regulated by the state. It's all federal actually is what regulates that. So they designate this is a flood zone, and they'll say you have to have flood insurance in that zone. You can purchase it if you're outside of a flood zone just to have extra protection, but so like earthquake, flood, there's actually what's called mine subsidence. That's going to be covering in case you are built on top of a mine. Certain counties in the state actually require that coverage, so that might be mandatory in your policy, but it's going to be built in there because of where you live or where that house is.
Okay. What's kind of the minimal coverage that someone gets with a rental property, like the dwelling and that sort of thing? Can you kind of walk me through that?
So I mean, there's the different parts of the coverage. There's the dwelling, that's the structure itself, anything that is that foundation and anything attached to that. So, in a lot of cases, you'll want to insure it for what the replacement cost would be, and in some cases, the replacement cost may be a whole lot more than what you actually have invested into that property. So, if something happened and it got knocked down, had a fire, you had to level the place and rebuild, you can have it insured for what it's going to cost to rebuild that whole structure, or in other cases you may insure it for what your monetary investment is in there. But you need to be careful with that sometimes, because you can't just leave a demolished house there and walk away. You're going to have to still make sure it's cleared, and regulations, that you're not leaving just an empty lot for someone else to deal with. You do still have responsibility for that, so that's why it's important to make sure your policy is going to cover you for just about anything that could happen to that house. The next portion on like a insurance coverage, you have your dwelling, you'll have other structures. That's going to be like detached garage, sheds. Looking at anything that's again
the garage or whatever is on the
detached
property
from the main structure.
Okay.
Then looking at personal property, so rental policy or renter owner policy, it's not going to have personal property in there, but if you have your tenants have a policy, or on your own personal house, you're going to have personal property. That's going to be anything that is inside the house, pretty much. If you took all of it and shook the house out, dumped it out, whatever's laying in the yard is your personal property. That's TVs, clothes, furniture, anything that's not attached. So a lot of times people are like, oh, and for example, I have this here, a policy that somebody had $228,000 of personal property. People are, they'll scratch their heads and say, there's no possible way I have that much of personal property. But if you actually go through and itemize everything, and it's not, you might be a bargain shopper and you go out and buy everything only when it's on sale. But if you have a house fire and you have to replace everything in your house, you don't have the luxury of waiting for things to go on sale. You need to start replacing your clothes, your furniture. You've got to start from zero. So
right.
That's where
replace everything.
That's where making sure you have the right types of coverage on that. With a rental owner policy, it's slightly different. So you'll have like a loss of use, or in other policies it's additional living expenses. So if you're living in the structure and there's a fire and you're no longer able to live there, those policies will give you money to go find other, source of dwelling, rental, or staying at a hotel. If you're the property owner and there's a fire and now you're losing income because you don't have any house to rent out, you have built into the policies many times will be a portion that gives you income in that time that you're rebuilding or trying to find other means for that, loss of income.
Okay.
Then you're going to have personal liability.
Yeah, what's that?
So the liability, that's somebody comes onto your property, trips, falls, you have a dog, somebody gets bit by the dog, they can come after you, they can sue you because it's your responsibility as the property owner, or as the tenant. They should also have liability coverage.
So if I allow pets on my property, that may in turn raise my insurance policy rates, right?
It can affect rates. Sometimes it's just a matter of the insurance company wanting to know what type of dog it is. There are certain breeds that may not necessarily be covered under certain companies. Dogs that are considered vicious, pit bulls, Rottweilers, a lot of companies will say we're not going to cover if they're living in that house. But then there's companies that say that it's perfectly okay. So it's all depends on who you're getting insurance through. But if you don't let the insurance company know that you have a dog living there and something happens, they
may have a problem.
They may have a problem and say, well, we didn't know about it, so we're not going to cover that incident. And that's why it's important that people don't always think about okay, they get a new dog, or they get married, or they have kids. Those are all things that you want to make sure you're now listing the dog on your policy. You're listing your wife on your policy. You're listing the additional occupants of the home, because all of those things are possible risks that
Gotcha.
could come up.
Okay.
The last thing on your coverages you're probably going to see is medical payments.
Mm-hmm.
So that's again that's in the event of somebody getting injured on your property. That doesn't necessarily mean that you were at fault or that they're going to sue you or anything. It just, the insurance company wants to be able to take care of a portion of their their medical needs in the event that something happens. And again, that it doesn't necessarily mean that you did anything wrong. It just means that somebody got injured there, and the insurance company has that in place to take care of those events.
Got it. Okay. Well.
And then I don't know if you have on your page, but underneath there, there's always going to be options, endorsements, additional forms that are added. Under those endorsements, those can be you can add coverage of dogs under there, water backup. So if you have a basement, you want to make sure that you have coverage in the event that not a flood, but water coming up from the sewer or a sump pump can be considered water backup. And then different companies offer different types of endorsements. Those are all things that...
Yeah, maybe let me look at the form here too while you're talking.
Yeah. So yeah, if you just want to go through, you have the dwelling, you've got the other structures, the personal property.
Angle this way a little bit. Okay.
the additional living expenses. A lot of times, so if you actually look, the dwelling and the other structures, it's just 10% of what your dwelling coverage is.
Okay.
That's a industry standard. But if you realize that you've got 2 garages or additional structures on your property, those can actually be increased for additional premium. And then you go down personal property as a percentage of your dwelling, additional living expenses. These can vary from one company to another. This is going to be a homeowner's policy, so it's not going to look exactly like a rental owner. With the rental owner, you're not going to see this personal property there.
Gotcha. Okay.
But the coverage is
similar, just a little different.
Mm-hmm. Yeah, they'll carry over and might have a change of name, but it still has somewhat of the same meanings when they go into that.
All right.
So this is actually just going through the home insurance shopper's guide. It's available on the insurance.ohio.gov. This is more pertaining to information on a homeowner's, but this is still, again, a lot of that information carries over, and it might be important to read through that and understand what you're looking at.
What's the website?
It's in www.insurance.ohio.gov.
Okay.
And that's going to be
cool.
A go-to resource for anything insurance, not only home insurance, rental, car insurance, life insurance, health insurance. It's all regulated through that entity.
Okay, like I guess like in Youngstown and stuff with rental properties and people flipping houses. What have you kind of seen with like insurance-wise? What are people usually like getting the minimum, or like what have you kind of seen?
I've seen a little bit of everything. I mean, the insurance companies are going to want to see that in some cases they want the house insured for what it's valued at. In other cases, you know that the house is going to take $150,000 to rebuild it, so that's really what you should be insuring it for in those cases. But even just you mentioned flipping a house, or a house is under construction. Some of those things you want to make sure that the insurance company is going to know what you're doing with the house. If it's going to be under construction, they have endorsements to cover it specifically for, because you're going to have building materials, or it's going to be vacant, so you want to make sure that those are listed on the policy, because the coverage can change slightly depending on
the contractors having different permits and those sorts of things. Make sure you're compliant with everything.
Yeah.
Okay, cool. Yeah, I mean it's a lot of work, getting a rental or flipping a house or whatever, but yeah, you got to insure yourself so you're protected.
Yeah, because any time starting from when you buy that house that it's in your name, anything that happens on that property can't be your responsibility.
Gotcha.
So you want to make sure
you're taken care of in that
situation.
All right, awesome. Hey, thanks. Appreciate it.
Yep.